All right, let's jump right into it because we do have a lot to talk about. A lot of things happened over the past few days. So first of all, as you guys know, I like to start off with a bigger time frame. I'm gonna start off on Bitcoin here. Daily chart. Okay. We've been monitoring since we basically started to kind of give our insights here. We've been monitoring this range between the 44 and the 40. Like we said, we had that breakout right when the news started to come out, right before the approvals came out on Wednesday. And we had that whole issue with the SEC's Twitter account being hacked or whatever that was. And, we had a nice an upside and then downside. And then when it really came out the following day, then we had, this whole nice push up to the next entry that we set in our last video around 48,000, which on the daily you can see it didn't hold. We had just this was the natural resistance level. If I zoom out, I'll be able to show you guys here a little bit more clearly. You see resistance, typical for it to pull back from there. Also, before 50, again, psychological number, you're gonna have a lot of people selling. This is a classic, in my view. This is a classic buy the rumor, sell the news. Okay, so since basically kind of end of October, we had this nice press because the market was basically anticipating and pricing in that the SEC was going to approve it. So that's why we had this whole nice rally up. When it actually happened, it started to go. Started to go down again back into our range, back into our original range 44 to the 40. Now, what's interesting here is that, first of all, the magnitude is nice volume down. A lot of nice short trades could be done there. Pretty much finished the day a little bit above the 50-day moving average. Yesterday, we've been kind of sitting on this level. Today, we've been starting very low volume for today. Tomorrow we've got Martin Luther King Day, so the markets are going to be closed. Of course, crypto is not closed, but I don't know how much volume should be anticipated there. Although I don't, we might have a nice surprise. What's interesting is that on the way down, this is kind of like a thinking moment right now. The market's right now thinking, okay, what are we going to do from here? And this was kind of like a pause. What again? Very possible we might break down from here to the bottom of the range. If we go to the 4 hours, we can see here we've been talking a lot about how the 200 moving average on the 4 hours been support until this news came out, and when it of course did come out, we pushed down from. Market's been pricing in that we're going to be having interest rate cuts throughout 2024, 2025, because it looks like that inflation target is getting there. We are. Look at the CPIs are becoming, at around 3%, 3.5%, 3.9%. If we exclude the food and the energy costs, then we're even down to some say 2.8%. Fed target is 2%, and what it looks like is that what the market was kind of pricing in is that, okay, we've reached the target. There's not going to be any more interest rate hikes. And looks like that the Fed will not be able to leave interest rates so high for so long, which is kind of against what Jeremy Powell has been, saying in all of his press conferences, and just a lot of his, the whole market just kind of shifted. If we look at how it looked like at the beginning of 2023, it just kind of shifted. The market just did not want to believe, and we see that a lot in bond prices. Bond prices just went flying, basically flying up. To look at is where we are now. So, like I said, we're in an environment right now that the market's kind of trying to understand what does this mean. I mean, are we going to be having interest rate cuts this year? Or we're going to be staying this higher for longer. I don't think anyone's pricing in more hikes. I just think that the market was really anticipating that we're going to see cuts coming. I think it was priced in for March, even March and June, that we're going to already be seeing 0.25% price cuts. Um, I think that the market is kind of understanding that that's not the case. I think the last numbers of the CPI showed that the NFP was strong. I think that we're not there yet, that we're not going to be cutting rates anytime soon, just yet. And I think that the Fed has been very cautious with that, and that's what the Fed has been trying to communicate to everyone, saying that look, we prefer having the economy stall a little bit, where they're willing to risk that than to have more disruptions in prices. So their main goal is to get prices down, back down to the level of 2%. That's what they said, 2% CPI levels, 2% inflation levels on an annual basis. That's what they're looking at. And we are getting there. I just think that it's going to take much more time. And I think that the market might be a little bit ahead of itself, especially this huge rally that we've seen throughout the past year. What does that mean from now? It is very common. Look, we're at a double top. Okay, this is all-time highs, 2021 November, and this is where we are today. We've been even just a little bit above the all-time highs. If we go to the S&P, we're going to see that we are at all-time highs, exactly at those levels. So, um, what can happen from here is there might be a nice pullback. I wouldn't be surprised if there is a nice pullback. Like I said, to at least on the QQQs, we're talking about 3,386. If we want to look at that price wise, it's 5% down, even lower than that. I would think maybe about there, 9% to the uptrend that we're seeing here. It also makes sense because it's a 200 moving daily 200 moving average. I might test that out again too. So again, very cautious. I do not like doing sharp moves. We have to look at things on a daily basis. What's happening right now? Where does the market turn to? And just to see from there, all right? So we have to be very, very, very cautious. There should be a correction. There's going to be obviously a correction. There's always a possibility of a correction, right? But you have to understand that when things reach certain levels, when you see that things have already been priced in, good news has already been priced in. We are at technical levels that yes, there could be a correction. Then yeah, sure. We've got to wait to see what's going to happen with the economy. If the economy shows signs of slowing, and people think that okay, the Fed will not be able to help with rate cuts anymore, then this of course can cause a certain reaction in the market. Sentiment can change. Okay, it's all about the sentiment at the end of the day. Anyway, enough for that. We're going to be monitoring it. We're going to be updating you, of course, with more good ideas. Okay, but as of now, very cautious. We would be looking, of course, to um, wait to see if it does break this area. If it doesn't, we might be coming down a little bit more towards in the short term basis towards the 395 areas. That's where we're going to want to take trades. Okay. All the best for now. Happy trading. Good trading. Bye for now.